little bit after the call, so hopefully Tesla is on schedule today, but I'll still have a little bit of time to discuss things after that. And of course, we'll have plenty of time here to discuss the shareholder letter as that comes out. But it's good to be back. It's good to see everyone. Appreciate you tuning in here. For those of you that are still sticking around to the channel, I think I probably need to change the name of the channel from Tesla Daily at this point. That's probably long overdue. I'll probably just change it to my name. But as we'll now start to get SpaceX earnings, I think I'm probably going to do the same thing for those too. So that just got scheduled for August 4th, a couple weeks from now. So we'll see, but if you are ever looking for the Tesla Daily channel name, that's probably going to be a historical artifact here shortly. So, all right, let's get into just some of the things the analysts are expecting. As we head into the earnings, though, stock right now trading at about $374, down about 1% today, but obviously the big move for today will be whatever happens with earnings. So we'll kind of wait and see on that and see how the reaction is. But let me flip over to Excel. We can take a look at just some of the analyst expectations, and there's just a couple of things I wanted to note as we head into that shareholder letter and earnings report today. Of course, we'll jump back here and fill the spreadsheet out as we get the numbers, but just looking at analyst consensus, again, reminder that deliveries in Q2 were pretty excellent, 480,000, obviously significantly above last year, certainly things going on in the historical numbers quarter by quarter there. But a big jump from last year, a big jump from Q1, where we had just 358,000 deliveries. So all said, analysts are expecting about $5 billion more versus Q1. So some pretty good sequential growth there. Expecting some growth in gross profit as well. One thing that maybe catches the attention is that even though the higher revenue and delivery numbers are pretty significantly increasing quarter over quarter, and usually you get better economies of scale, which allows you to grow gross margin, analysts are expecting this to decline a little bit. So I just wanted to spend a couple of seconds talking about why that expectation exists, and then also on free cash flow. So back in the Q1 earnings call, Tesla noted that the automotive gross margin and the energy gross margin had sort of one-time benefactors in that quarter to the tune of about $230 million for auto and $250 million for energy that were boosting the margins in that quarter. Basically, they said it was from some tariff changes. Obviously, that's a difficult thing. They also said that some of those impacts may come into this quarter too, which could be good or bad. We'll obviously see here in a moment. But they did note that they just had some benefits that are sort of unique to that quarter in Q1, which is part of the reason the margins were higher. If you factor those out, it was about a 220 basis point improvement, that $480 million there. So excluding those one-time benefits, which again may not truly be one-time, but are not something that would happen in a normal quarter, that would be like an 18.9% gross margin. So if you kind of back those out, there is a margin expectation increase from sort of those baseline numbers. Particularly noticeable in energy, where Tesla had a 39.5% gross margin, which is way higher than we've seen historically. Usually that's around 30, at least for the last few quarters. Obviously that was lower in Q4, higher in Q1. I think always the best way to look at energy has kind of been on a 6-month rolling basis. And you can even see that in the delivery numbers, where Tesla specifically noted, there's going to be fluctuations quarter to quarter. So this quarter we saw 13.5 versus the 8.8 last quarter, and obviously these numbers are pre-announced ahead of time, just shortly after quarter end. So anyway, I just wanted to point that out as we get the numbers today. If there are declines in these, certainly in energy, I would expect a decline in the gross margin, and then automotive, we'll see. They could potentially make up that difference just with the higher volume. It is significantly higher. Whatever that is, 40% growth quarter over quarter, something like that. So that obviously will be a good thing in terms of the cost per vehicle, as you can amortize more of your fixed cost basis and things over more vehicles. So wanted to point that out. And then also on the free cash flow line, analysts are expecting pretty negative free cash flow, and that's because last quarter Tesla guided for $25 billion plus in CapEx in 2026. We can go here and look in a second what the Q1 number was, because I don't have that off the top of my head. But because that is significantly higher than the roughly 10 billion-ish CapEx that Tesla's been spending in recent times, that would suggest, and even Tesla said on the call, that likely leads to negative free cash flow in 2026. So what quarter that falls in, where that CapEx is heavier or lighter, or maybe it's going to be consistent, remains to be seen, but analysts for that reason.
Schließe dich Millionen von Wise-Kunden an und überweise günstiger. Lade jetzt die Wise-App herunter.
And if we look at the Q1 update, so this is not the Q2 update yet. We're not time traveling like 5 minutes forward. But let's just take a quick look at CapEx. So it's about $2.5 billion, which again, a little bit higher than we've seen in recent quarters, but not a ton. So that suggests if you're really going to get to 25 billion plus in 2026, you've got really 3 quarters instead of 4 quarters to amortize that higher run rate CapEx over. So point being, you subtract the 2.5 here from 25, you're talking about 22.5 billion over 3 quarters, 7.5 billion a quarter. So tripling potentially of CapEx. Obviously, that's going to lead to negative free cash flow, and the free cash flow numbers have been in the sort of $1 to $2 billion range generally. So hopefully that makes some sense. Obviously, Tesla, the reason for that, all the expansion things that are happening, one of those big ones that's supposed to happen this quarter, based on this sort of guidance here, is in a sort of 3-month period, more than doubling, or I guess close to doubling, almost exactly doubling of the AI infrastructure that Tesla has. So we'll see. I'm sure there will be hopefully a similarly updated graph here when we get the earnings report here in a few minutes. All right, so I think the other things we're all looking for, updates on FSD. Nice to see Tesla continue to expand into a couple more cities yesterday. I think we're up to 7 now. Somebody noticed that there were actually pretty good observation skill of noticing that the screenshots that Tesla posted of the geofence areas for the new cities, they noticed there was like 8 little dots that you could scroll through versus the 7 cities that it's announced in right now. Probably not intentional on Tesla's part, but shows that they're probably testing another city internally. Most likely that would be, I think, Phoenix or Las Vegas, because this showed, the preparations underway for those cities. I don't think that those are in the Robotaxi map. I think all these other ones are. Yeah. So that 8th one that they're probably testing live internally right now is probably Phoenix or Las Vegas, probably Vegas. But then shortly after that, I would assume that Vegas and Phoenix, I would suspect maybe the day before next earnings call, we'll see those two come out, but obviously hopefully sooner than that. So we're getting real close to market close here. Should have the earnings report here in a few minutes. Last few quarters had some trouble accessing it, so hopefully that'll get fixed. I've got the developer empty cache tab here in Safari to try to clear that out. I've got the hyperlink to the first quarter earnings that we can manually adjust to Q2, and then we've of course got the page here. So hopefully one of those strategies will work. I think last time someone literally had to DM me on X, so that's our fallback. If one of you guys is able to access it and DM me, I'll try to do that. Probably have to switch over to Excel there for a second to do that, but always appreciate the help. All right, so we are now at market closed to $374.01, down 1.3 cents on the day. Not sure where that compares to this time last quarter. I guess we can maybe check here, roughly. Where would we be? Mid-April. So, yeah, pretty similar levels. This was probably that was probably not the earnings report. Probably somewhere around here. So, pretty close to where we were around the last earnings report. I'm going to start refreshing. Not that page. I'm going to start watching the chat to see if we get this report. Usually my first indicator is some pretty massive movement after hours, although that can be a little bit of a false flag too. Sometimes it moves and nothing's actually happened yet. All right, I'm just going to read through some of the chats here.
Det är helt lustigt om det från att det fått Dänemark, ja. Såklart. Jag tror inte så här.
I know it's not exciting to watch me read things, but I don't know how else to acquire the information in the chat. A lot of people just saying good to see you back. It's fun. It's really nice to be back. I always get like, I don't know. I'm a little bit introverted, so I always get like a little bit nervous coming into these things, and then it starts, and you guys are all so nice, and it makes it a lot better.
Yes.
All right, well, up $5. Let's see. Seems like something may have happened. Clear the cache here. I don't know if that'll do anything if the page is open, so maybe if we just go back here. Yeah, and if anyone's seeing it, shoot me the link on X, I guess. We'll try this other. Can't find it there. Nothing here yet. Well, now it's back down, so. Somebody said clear the cache, Tesla Q2 theme. Well done. If we do see a pretty negative free cash flow, that is fitting. But obviously those CapEx numbers are for what Tesla feels is going to be a good return on investment. And Tesla's always had really good return on investment for the capital expenditures all Elon businesses have. So
Super,
I'm definitely in favor of Tesla putting capital to work when they feel like it's worthwhile. Passion Planet, good to see you on here. Appreciate that super chat. Thank you. All right, so it doesn't seem like anything came out yet. I just had that little. Sometimes Google does that. I don't really know what the reason for that is, but Google many days has like some weird one trade spike. Yeah, and I'm sorry I had to miss last earnings. It's something I try to make work if at all possible, but it was just things well outside of my control last quarter. This is still Q1. Just trying to change the link here. Yeah, not working yet. Tesla out. Oh no, no movement. Google earnings came out as well. All right, I see somebody. No, the chat's going away. Let me try to grab this. I can't copy and paste from here. That should be this link though. All right, guys, bear with me 1 second. We'll make it happen. All right, we did it. Not too bad. Okay, Q2 update. Let's just see what the quick reaction is here. Down slightly, down 2%, so not a huge reaction. But let's see. So profitability, we got 1.1 billion GAAP net income, 1.2 billion non-GAAP net income. Usually those are further spread apart, so something going on there because stock-based compensation is definitely more than 100 million. We'll take a look at that. Operating cash flow 4.7, free cash flow negative 1.1 billion. You saw the analyst expectations there of negative 3 point something. So less negative free cash flow could mean more CapEx coming in later quarters this year. And then 1.2 billion decrease in cash, pretty close to the negative free cash flow. Record Q2 vehicle deliveries, launched Robotaxi in 3 cities in Florida in July, began production of Cybercab. So just a quick read through the summary here. It may be a little bit small for folks, but hopefully not too bad. Let me just size the window here correctly. Sorry. This is my desktop. Which is the standard one. All right, Q2 was a strong quarter for our core vehicle, energy, and services businesses, as well as our manufacturing infrastructure and AI initiatives. Our focus remains on strengthening these core businesses and making the necessary investments that will deliver amazing abundance. Tesla generated over $100 billion in revenue on a trailing 12-month basis for the first time. We achieved record second quarter vehicle deliveries with continued growth in new markets and strength in established markets. Our energy storage business returned to growth, achieving its second best quarterly deployment number and record deployments on a trailing 12-month basis. The services and other business achieved record profitability and margin in the quarter. Cybercab began production at Gigafactory Texas, and Tesla Semi remains on track for production this year at our new factory in Nevada. Progress also continued on battery pack capacity expansion, the main limiting factor to near-term vehicle production volume increase. Megafactory Texas is nearing completion, with startup production planned for this year. Additionally, site selection, preparation, construction, and equipment procurement progressed in the quarter for solar and semiconductor manufacturing. FSD supervised penetration continued to grow in the quarter, with more customers opting for subscription at the time of vehicle purchase. Robotaxi rollout continued in the US and is now live in 7 major metros. Construction at our Fremont factory for Optimus began after we decommissioned the S and X lines, with anticipated production later this year. Tesla is in its largest and most exciting period of investment. From here, there remains much hard work as we aim to revolutionize transportation, energy, and productivity through our leading real-world AI. Scaling will be nonlinear, and we are focused on long-term value creation. We've never been more optimistic about the future. All right, so getting into some of the numbers here. Total revenue you can already see is ahead of analyst expectations, which was in the 27 billion range. Gross profitability, the gross profit number itself actually pretty close to analyst expectations. Gross margin though, with the higher revenue, lower. We just talked about that. There could be some one-time things hitting that, so too soon to assess that. But we'll kind of get into the spreadsheet and see how that's breaking down, and any other comments that are made here in the letter. But operating margin also quite a bit lower than I think analyst expectations. That was about 5.2 or 5.4, something in that ballpark. 1.4%, that's going to be the lowest that Tesla has had in a long time, as operating expenses increased a little bit quarter over quarter, even though the gross profit sort of stayed relatively flat. EBITDA, 3.3 billion, 11.6% margin, EBITDA margin, and there's those GAAP and non-GAAP income numbers. Looks like the GAAP number probably had some one-time benefit, is my guess, just because normally you would see this be a little bit lower on this type of operating income, certainly. So we'll see what's going on with that GAAP number. But end of the day, 32 cents GAAP, 33 cents non-GAAP. If I go back to the analyst expectations, I believe that was, 55 cents non-GAAP and 36 cents GAAP. So the GAAP number is pretty close to analyst expectations, but again, I think there's probably some sort of one-time number influencing that right now. All right, there's that CapEx number, so 5.8 billion, again, amortized over 3 quarters. The remaining 22.5 billion that Tesla guided for this year, 22.5 plus billion, would have been, 7.5 per quarter, versus this now at 5.8 means that we've got, can't do the math super quickly on live stream, but 8 or 9 billion a quarter remaining in Q3 and Q4, which are, pretty serious numbers. But free cash flow is better than expected, so shouldn't really matter what quarter in particular that's happening in. Everyone knows that it's coming this year. Cash and cash equivalents decreased a little bit with that negative free cash flow, not to be unexpected in that situation. So we kind of talked about that stuff, won't spend too much time on it. Production, 451,758 vehicles. I think we already knew that from the delivery release. Same thing there. And then we also have the FSD subscription number. That's a larger increase than it was last quarter. You can see, looks like 180,000 added last quarter. Looks like around 200,000 added this quarter. So nice to see that continued growth, and you can see year over year, that's about a 56% increase in FSD subscriptions, which also includes outright purchases. And then vehicle deliveries, the total vehicle fleet up 21%, which shows that the penetration rate of FSD per vehicle is increasing. It makes sense. There's more markets now that are able to access and purchase or subscribe to FSD, and FSD as a product is just getting way, way better. I continue to just be extremely impressed with it. I don't remember the last time I had a safety critical intervention, which I think I've said that maybe a year ago too. So it's been forever from something like truly safety critical. Obviously there's things you got to do with like parking and stuff, and Tesla's talked about that and things that they're continuing to work on. But in terms of just like safety critical things, they're extremely, extremely rare these days, which is amazing. Something we all hope to get to, and we're very, very close to being there. Okay, vehicle supply down, which makes sense with deliveries outpacing production. That definitely helps the cash flow, even though it was negative, but that's because the CapEx jumped by over $3 billion. So that'll eat up your additional benefit from deliveries outpacing production very quickly. Storage we talked about, and then superchargers and connectors pretty consistent to where they've been in terms of that growth rate. All right, so before we go through and read, I'm just gonna take a quick
Oh,
peek
schon
and see
1953,
what else
ja.
may be new here.
Oi, oi, oi.
Nothing there jumps out at me as new.
Oi, oi, oi,
These
oi, oi.
statuses may have changed a little bit, but I
Ja.
think otherwise these are all similar to what I remember. Yep, there you go. So we just looked at this graph
Wow.
and expected a rough doubling,
Ja, ist klar
and it
gewesen,
looks like
so, ja.
Tesla got
Nee, cool.
very close to that, maybe
Nee, ja.
just slightly less than what they had
Nee, joh.
expected
Och,
in
nee,
that
joh.
graph last quarter, but very, very close to how that graph looked. So
Schick gar nicht mehr,
that's
ne?
good to see. And then you can see here in
Oh, that
Q4,
is
it looks like
no,
probably,
50
yeah, it looks like it'll probably be pretty steady. A little bit of growth in Q3, but then another big, massive, massive jump, maybe a 50% growth number there in December. So when you look year over year, you're going to have Tesla probably quadrupled their AI capacity, which is, significant, and obviously I'm assuming a very big portion of the capital expenditures there as well. All right, so FSD miles continues to, slope upward, which is really nice to see, and no surprise again, based on the higher penetration and the product just being able to capably handle more of the driving use case, driving more miles. I'm at my self-driving stats. I feel like I need to post them on X, but I'm at like 98%. And the other 2% is like letting my friends drive. Like you got to actually drive the car, and then we'll do FSD. But for me myself, it's probably 99, maybe would round up to 100. So we'll read through those here in a second. Yeah, so here's those. Same chart, same nine cities. So yeah, Phoenix or Las Vegas would probably be that one that seems like it's internally testing. Cumulative paid robotaxi miles. So that's disappointing to see. That's probably one of the more disappointing parts of this earnings report for me so far, is that you're not seeing that same trend that you're seeing with just FSD supervised miles, with robotaxi paid miles. Like that increase was, I believe, looks like it's probably less miles in Q3 than in Q2 than in Q1, which is obviously, you want to see, an upward slope, not a downward slope there. Tesla's talked about, I think, the reasons for why this is. I think they're being very cautious right now, and I don't think that they feel like there's a ton of reason to ramp before sort of Cybercab is ready and fully validated, and all of these new areas are sort of ready and fully validated. At the same time, you would hope that that would be part of why this continues to increase, is because those things are happening. So it's one of those things that takes time. It's one of those things that's going to take an annoyingly long time, but obviously something that I continue to feel like Tesla's on track to do. And again, that's just based on my own experience with the product of FSD. I think every 3 months, consistently, we get, maybe every 3 to 6 months, we consistently get pretty major update that improves the product. So, but that all that said, definitely disappointing. I think if you ask anyone last quarter, if they were to like plot what they hoped or what they expected, you would, continue to follow this nice little slope upward and be somewhere, around the 3 million miles rather than the 2.4, something like that, maybe even 3.5. So I don't know. It'd be one of those good things of like analysts asking a question on that. Maybe they will, maybe they won't. We'll see. I didn't have a chance to look at the Say questions, so I'm not sure what the agenda is there. Again, we'll read through this. Maybe they even explain it. I guess let's read at least the robotaxi one here. So, started production of Cybercab, purpose-built autonomous EV designed to be the workhorse of the robotaxi fleet. Engineering test drives of production Cybercabs on public roads also began during the quarter, and we began offering employee rides in Cybercabs on our Gigafactory Texas campus in July, both important precursors to Cybercab deployment in our robotaxi fleets. Expanded unsupervised operation area in Austin, and launched unsupervised rides in Miami, Orlando, and Tampa in July. Preparation for expansion of our robotaxi service to additional U.S. metros continued, including testing, permitting, and first responder training. FSD supervised adoption grew in the quarter, including record net new subscriptions. We also achieved record FSD attach rates in North America, with over 55% of new deliveries including FSD subscriptions. Wow, that's a really, really impressive number. I mean, the FSD subscription at $100 a month, I mean, that's a serious take rate on that option. I'm pretty impressed by that, because if you go back and you look at, like, all right, worldwide fleet, 9.7 million vehicles, FSD active subscriptions, 1.5 million.
Das Geilste
You're
ist
talking
das
about
wirklich,
whatever that is,
dass das so
14,
geil ist.
15%,
Das ist nicht so gesund,
or I guess
aber
maybe
es
like
ist auch nicht so
16%
schädlich.
attach rate.
Es ist einfach,
Versus here, you're saying, all right,
es ist schon
and obviously that's
nice,
global
zwei
deliveries,
Dörfer
right? It's not
vorbeifahren,
available
das
everywhere,
macht-
but
aber eben,
for
lebst du
55%
mit
of new
20
customers to be
vorbeifahrt, dann kannst du
subscribing to
aber
FSD, I
schon
think
kannst du
is
auch noch ein Zeitchen lang.
I think that's a tremendous number. So maybe my most disappointing part, maybe my most excited part of the earnings right here on this page.
Kannst du, glaub ich, alles gehen, wenn du einen Hund siehst oder so.
All right, building on the approval to deploy FSD in the Netherlands, we have received additional approvals in Lithuania, Estonia, Denmark, and Belgium, with customers in these countries driving over 50 million kilometers, 31 million miles on FSD as of July. We are seeing elevated interest in our vehicles and markets with FSD approval, which makes sense. FSD is a major reason to buy a Tesla.
Also ohne Schalter.
Automotive services and other gross profit grew $302 million sequentially, record 648 million, achieving a 14% gross margin. Usually that's a 5 to 10% margin business in the recent years, with growth driven by all major segments. As our vehicle fleet grows and we further improve business efficiency, we expect continued profit growth. All right, so I'm gonna flip back up here. We'll go through this stuff, but trying to see if there was an outlook section. Since usually that, yeah, there we go. Just take a quick peek at what the stock's doing. 361, so down another, I don't know, 1% since we looked before. All right, so outlook for volume. We are focused on maximum capacity utilization at our factories. Deliveries and deployments will be impacted by aggregate demand for our products, supply chain readiness, and allocation decisions between sale to customers or for use in our fleet, our owned and operated fleet. For cash, we will manage the business such that we ensure a strong balance sheet, maintaining sufficient liquidity to fund our product roadmap, long-term capacity expansion plans, including further vertical integration and other expenses. Profit, while we continue to execute on innovations to reduce cost of manufacturing and operations over time, we expect our hardware-related profits to be accompanied by an acceleration of AI, software, and fleet-based profits. And then for product, we continue to evolve and augment our product lineup with a focus on cost, scale, and future monetization opportunities via services powered by our AI software. We remain focused on growing our sales volume through a differentiated and efficiently managed product portfolio, which includes leveraging and optimizing our existing production capacity before building new factories and production lines. Tesla Semi and Megapack 3 remain on schedule for production starting in 2026. First generation production lines for Optimus are being installed in anticipation of production in 2026. Capacity build-out and ramp related to our multi-year infrastructure investments, including AI compute, solar battery material, and semiconductor manufacturing, are underway. So that's the massive $5.8 billion in capex that's getting started now, or growing now. Probably has been started earlier. So let's go back to the couple of sections that we did not read yet, which includes these product updates. So in automotive, our overall Q2 record deliveries were supported by record deliveries in several markets. I won't read all those there, but you can see them. We launched the Model Y L in the US market in July, consistent with launches in other markets. We have seen a positive response from customers. For energy, generation, and storage, we achieved record energy storage deployments in EMEA, supported by record deployments from Megafactory Shanghai, which continues to ramp production. We are also on track to begin production of Megapack 3 and Mega Block this year at our new Megafactory, Texas. Powerwall 3-phase is now available in Germany and is designed to meet the power needs of homes with 3-phase power with a single unit. It includes a native 3-phase inverter, bringing the cost savings and energy security of our residential energy products to more customers. We are focused on bringing Powerwall 3P to other 3-phase markets as quickly as possible. And on robotics, we have decommissioned the SNX lines at Fremont Factory and are installing the first generation lines for
Swiss Natural für Hunde, die sich wohlfühlen und das auch ausstrahlen.
installing the, and I think we went through that. No, we did not go through these. So on supporting infrastructure, AI trained compute, more than doubled our on-site compute in Texas during the first half of 2026. Cortex 2 supports the development of both vehicle and humanoid robot autonomy software and will ramp further over the rest of the year to ensure we have sufficient compute resources. Now I'm noticing that the status here did change. Cortex 2, I believe last quarter was development, something like that, and has now been updated to production, which obviously would be associated with this increase here, I assume. Yeah, that makes sense. So good to see that. And then on batteries, we continue to work on initiatives to increase battery pack capacity as it remains the limiting factor on ramping our vehicle production globally. Our teams made further progress on the ramp of new battery and material factories, including vehicle pack capacity in Berlin, cathode material production and lithium refining in Texas, and LFP cells in Nevada for our energy storage products. We are also continuing production of 4680 cells to support production ramps of both Cybercab and Tesla Semi, and increased production of Model Y. We also added over 2,400 net new supercharging stalls, growing the network 17% year over year, continue to innovate our supercharger design and production process, helping us scale the network more cost effectively, further reducing supercharger wait times through improved trip planner, forecasted stall availability, and dynamic waitlisting integrated into the Tesla app. And then on AI and software, began delivering FSD version 14 Lite to customers in the US and South Korea, the latter in July. With AI3 hardware, this software build distills the driving behavior from AI4's V14 series into both the camera and compute configuration of AI3, and includes design, destination options, parking, etc., and speed profiles. It also addresses challenging driving scenarios with improved proactive and reactive responsiveness, including navigation handling, merges and forks, pedestrian interactions, traffic lights, and vehicle cut-in. On AI inference compute, we continue to make progress on construction and equipment procurement for our semiconductor fab in Austin. While still in its early stages, this project is critical to building our own chip-making capabilities to ensure reliable long-term supply of essential logic and memory chips for our products. And then Automotive and Other, in July, we began rolling out our summer release with additional functionality aimed at enhancing the customer experience and further promoting our autonomous capabilities. Customers can now view and share self-driving stats, making FSD Supervise more social and interactive. The summer release also includes additional Grok functionality, such as making phone calls, searching and playing music, and adjusting climate controls. Automatic navigation expands beyond home and work to support any destination based on personal habits and schedule, including drop-offs on the way to work. And then we went through the services page and the Outlook page. So I think that is everything in the earnings deck so far. We'll take a look here at some of the photos that were shared. Something that we've seen before, basically just all the ways that Tesla feels like they are involved in this future of amazing abundance. I think this looks a little bit nicer than before, so I think they've updated that a little bit, but stuff we've seen. Model YL available in the US, I think everyone's aware of that. Cybercab. I'm excited for people to get to sit in Cybercab. It's a little bit, I don't know that I'd say it's like surreal. For many of it maybe, but it's just cool. Being in the car with no steering wheel is cool. Even if you've taken a Waymo, it's like you're still in a car that looks like a normal car. Cybercab is different. It's cool. Ramping unsupervised in Miami. Cybercab production. Seems like it's going pretty well. It's interesting because Cybercab is not for sale. So there's like not as, I don't know. It seems like the interest in the production ramp is lower because of that, which I think makes sense because I think the gate right now for massive unsupervised robotaxis is not Cybercab, but rather the software, and regulatory approval as well. So it's just been kind of interesting that there doesn't seem to be as much focus on that, but from what we can see, it seems to be going pretty well, and Tesla by now has produced hundreds of Cybercabs, so hopefully we're getting to a point where the intersection of hardware and software and everything is finally there, and it's an exciting future to look forward to. First generation production line in Fremont for Optimus. Cool to get a look at that.
Chines vielleicht, ja, am ehesten noch. Also ja, ich sage eher noch als Engländer, ja. MG. Nein.
Tesla Semi Factory.
Ein Range wäre natürlich schon geil, ja. Ein richtiger Range.
Tesla Semi is also an amazing vehicle.
Oder ein Land, ja.
Excited to see those out there in scale.
Aber sonst, ja, ich weiß doch auch nicht. Ein
Tesla
ist
Lithium
natürlich auch
in-house
geil.
battery grade
Bentley,
lithium
aber
production
sonst,
ramp in
sag
Texas.
ich mal, ja. Das ist alles wie Reliant eigentlich, der Rest, sag ich mal.
And then some of the
Alles
financials
ist Reliant,
charted
ja.
here. Then we'll go through quickly the year-over-year summary,
Das
but
werden wir schon mal später noch
maybe that'll give us some insight on the gap number.
So,
Total quarterly revenue increased 26% year-over-year to 28.2 billion, driven by increase in vehicle deliveries, growth in services and other, positive foreign exchange impact of $500 million, growth in energy generation and storage, higher automotive ancillary sales, primarily driven by an increase in FSD subscriptions, offset by lower regulatory credit revenue, which that'll be good for auto margin tax credits on a year-over-year basis, which we'll look at, and then lower vehicle average selling price, excluding foreign exchange impact, inclusive of mix impact.
geht es ja weiter.
Profitability, operating income decreased 57% year-over-year to 0.4 billion, resulting in 1.4% operating margin, primarily impacted by the following items: positive influence from increase in vehicle deliveries, services and others, average cost per vehicle declining, positive foreign exchange impact, but relatively small, $100 million, higher automotive ancillary sales with FSD, offset lowering profitability because of increased operating expenses driven by AI and other R&D projects, stock-based compensation, and selling general and administrative costs, lower regulatory credit revenue, lower vehicle average selling price, inclusive of mix impact, and increase in energy warranty-related charges due to vendor cell issue. So it sounds like Tesla had a vendor that had an issue in battery cells in an energy storage product that they deployed that probably necessitated some sort of big expense, probably a replacement cost, would be my guess on that. 10Q might have more info on that situation. Or on the call, maybe we hear a little bit more. That's probably not, depending on the size of it, probably not enough to warrant super lengthy discussion, but we'll see. And then cash, we already talked about those. Nothing crazy on that. Well, obviously high CapEx, but nothing that we did not discuss yet in that line there. Regulatory credits, so only 146 million. So yeah, that's definitely lower than what analysts would be expecting. Although I don't think that's broken out anymore. I would imagine most analysts were expecting 400 or 500 million. So that's going to be a factor in those gross margins. And then
Ja, genau, ja, wahrscheinlich funktioniert das auch. Mal
see if anything else comes up. Sometimes on these types of things we get more insight on the call. All right, so that is everything there. So now we get the best time of the program, and we'll flip over to Excel and fill in some of these numbers, and I think that'll help contextualize some of it, like that automotive gross margin X credit. So unfortunately, it'll take me a minute to fill that out, but hopefully that'll again help some of the context of this discussion. So I will flip back over to Excel and we'll fill out this as quickly as possible. Just go ahead and put that right there, because that should be right. That should be right. Yep. I believe this was 1.48. Correct number of decimals in here. All right, automotive sales. Bear with me as I grab these numbers.
Was ist jetzt passiert? Da ist irgendetwas gesehen. Es geht gleich, ja.
Regulatory credits, just had that. I think that was 146. Yes, 146. Energy sales,
Es geht gleich, ja schon.
31,
Also ja, wenn es jetzt
39.
keine gibt, einfach mal. Du musst nicht einen haben, aber wenn es muss eine geben, sage ich mal.
Services and other. Pretty big business on its own, 4.6 billion.
Also,
So I did something wrong there.
6, 12 machen wir, 7, 12 ist fertig. Das geht nicht. Das hast du nicht gesagt, der Motion, ja. No possible. Das sagt mal, das ist möglich, ja.
Guess my number formatting is what I did wrong.
Das ist einfach Evolution.
Strange.
Einfach nach dem 1, das ist nicht fertig, die 6, ja. Geht weiter, dann kommt es irgendwie.
All right, hold on 1 second.
Dann kommt es 8, ja. Ja, es kommt auch.
There we go. So 28,236, that matches up. So that's our total revenue. There's that up 26% year over year. And analysts were 2% below that actual number. Looks like that was a mix of being a little bit low on automotive, being way high on energy. Not sure what the reason for that would be. I need to take my fix that later. And then way low on services and other. So that's interesting that that jumped, and the margin of that jumped quite a bit as well. ASP will come back to, so getting our profits here, we just need to subtract out the 17,053 in costs, which regulatory credits, and then on energy we had costs of 2,499. And services and other costs were 3,933, which gives us our gross profit 4,751, just very slightly up from last quarter, and you can see well below analyst expectations there. So auto gross margin 16.9, automotive gross margin X credits closer to the total gross margin, automotive gross margin, like you see a larger spread there, 90 basis points, only 60 basis points here. But you can see in the past that's been as high as 300 basis points there. And I guess this is 190, not 90. So much smaller spread there, which means that the automotive gross margin X credits is looking a little bit better. And again, if you take out the 230 million, we can do that quick math here, of one-time benefit, that'll give us a better quarter-over-quarter comparison. So really last quarter probably more accurately stated as around 17.7 X credits and X that one-time benefit versus 16.3 here, so 140 basis point decline quarter over quarter, which I think is disappointing given that Tesla delivered so many more vehicles. We'll probably hear a little bit more about that. I'm struggling to remember how that was explained in the deck. Sounds like maybe some foreign exchange. I thought that was a positive benefit though. So that's interesting. Hopefully we'll hear a little bit more on why that would be. Could be another one-time thing that moved things negative. We'll see. Energy gross margin. So as we said, that had a $250 million benefit last quarter. So if you took that out, this was more like 29.5. Still though, lowest energy gross margin number for a while, which again, probably a little bit disappointing given the volume that we saw there. So I'd say probably lower than expected, higher than expected certainly for services and other, netting out to lower than expected by 270 basis points versus where analysts were at. Probably, I don't know, maybe this would be like yeah, so I think like you could add $300 million in profitability.
Nice, det ska gå rätt så. Ein bisschen Stress kann man einfach heute sagen. Ein bisschen. Ja, erstmal Zeit haben wir nicht, aber Geld auch nicht, aber irgendwie haben wir es doch. Aber dann doch nicht, weißt du. Ja, ist ja gleich. So viel zum Ressourcenmanagement, ja. Aber wird es immer besser, gell? Du weißt das auch, Fruchtflieg, wenn ich auch. Was machst denn du da? Was gibt's denn da für die Sonne? Werbung. Ja, schätzen, man sieht ja wahrscheinlich, ja, kannst du schätzen. Vielleicht auch nicht, ja. Du kannst auch automatische, weiss nicht, ja. Automatische, ganz deutlich kennen. Wie man es auch hat. Karl am Schluss, ja, jetzt sind wir am Fabrik. Das ist nachher der Wohltäter, verstehst du? Am Schluss. Kommt daher mit der Gold-Dukaten auch, der Waffenfabrik auch. Oh, das steht gut, ja. Danke, Herr Karl, ja. Das haben wir gebraucht, ja.
And then there's a certain tax items here. That looks like it's also a positive benefit because it's similarly a negative number in the sheet, which the SpaceX number is a positive adjustment. It's a little bit weird how you think about these things. You know, you can look at it either direction, but in any case, that was the big thing that is different this quarter between the GAAP and the non-GAAP number. So let's just say 763 plus the 274. 1037. So for now, I'll flip back to Excel and we'll just add that in manually and maybe highlight that so we don't forget. So I'm basically just going to just add back the 1037, which was the combination of that tax impact and the SpaceX value change. And then that reconciles back to the 1,114 million GAAP net income that was stated in the doc. So hopefully that makes sense to folks. And then the GAAP and non-GAAP earnings per share numbers. So again, those were, looks like 33 cents and 32 cents. Back to Excel, 33 cents, 32 cents. And for those wondering, that's just these numbers, non-GAAP net income and GAAP net income divided by the outstanding share count. Hence earnings per share. So 33 cents, 32 cents. That's what I was saying. Like usually there's a larger spread there, usually like 10 cents, because usually stock-based compensation is like 10 cents worth, which is sort of same thing here. But then we had those other factors, which was $1 billion difference there. And then free cash flow. Again, that was the negative 1 billion-ish. Let's see where that's free cash flow. Yeah, negative 1092. So significantly better than analyst expectations. But again, people are just kind of learning how the CapEx schedule is going to look through 2026 because we really only had guidance for the whole year. Which is noted there. All right, so trying to think now. That makes sense. Let's grab ASP quick because that's the last part. So just need those three: automotive revenue, leasing is 364. COGS of leasing was 187. And number is 7580. So that should give us our ASP. Let me annoyingly fix my formatting there. All right, so kind of the last thing.
Nein, goed zo.
Sorry, that's just like LCD or something, but
Dat is een proper, hoor, zeg ik maar. De bron, hoor, is een
Sorry.
Proper,
there we go.
proper, hoor, iets er niet aangehad.
All right. So average selling prices fell by 1,300. Cost of goods sold increased by 100. There's your margin compression. And this is X credit and X lease, so that does not take into account any of the changes, or it does factor out, like excludes the changes from regulatory credits that we were talking about before. So this should be like a true, just how the business is doing. Cost went up a little bit, average selling price went down a little bit. Q1 average selling price was a little bit of a higher outlier than it has been. So even year over year, average selling price did increase a little bit, and average cost of goods decreased a little bit. So that's nice, which means you've got a little bit better automotive gross margin X credits this year than you did last year. But given how Q1 went, people were expecting, probably higher ASP. Actually, analyst expectations probably around that ASP, but probably expecting a little bit, lower cost because the ASP was falling. Usually that means it's like a mixed thing, or oftentimes that can be a mixed thing, where if you're delivering cars that you're charging less for the consumer, usually the cost of producing those cars is a little bit less. Not 100%, but obviously those lower vehicles probably have less margin. In any case, usually ASP falling, you'd expect COGS to fall and not increase, and that's part of what we're seeing in that margin compression. So we'll see what Tesla's got to say on that this quarter. Again, though, you got to consider last quarter had that weird one-time $230 million too. So that would have driven up the, well, let's see. That was a benefit, so that would have lowered the average selling price. Getting myself confused here. It would have been a negative impact on COGS, so it would have increased COGS if you had excluded that number. So if you had excluded that number, then COGS actually probably would have dropped quarter over quarter, but just not commensurate with the average selling price decline. Hopefully that makes sense. Okay, so that's all our numbers finally. So I think again, kind of the big things for me, I'm happy to see FSD active subscriptions continue to increase at sort of a faster rate than they had been, although on a percentage basis that's probably pretty similar, but just on a numbers basis that is, again, 200,000 versus whatever, 180,000 before, which is nice to see. And probably the most important point was that 55% of new vehicles delivered in the quarter for Tesla in the United States, maybe even in North America, have to go back and look at how they phrase that, but 55% take rate on FSD, that's massive, because historically, again, that's been like, what, 10%? And this is, like, that is the most profitable thing that Tesla can sell, is that FSD subscription right now. So that's great. Obviously, I think the functionality is the best and most approved in the United States right now. So as that happens in other markets, hopefully the take rates can be similar, and I think that take rate will probably keep increasing as people keep understanding how good FSD is, because I think a lot of people just don't understand right now. So that part to me is really encouraging. The sort of big question I would have is what's driving the automotive gross margin down on 122,000 more deliveries, because usually you would see a situation like that increasing your gross margin a little bit. So probably the biggest question I would have specific to this quarter, obviously, in the grand scheme of things.
Hey, Lebensmittel kosten momentan wie viel? Wenigstens gibt mir die App etwas zurück. App heißt Nielsen IQ Consumer Connect.
With context in mind, maybe the number one question, and I don't even know if I'd ask it because I think I know Tesla's answer, but the robo-taxi growth rate, miles not increasing at even the rate that they were last quarter. That would be sort of probably the number one question I would have. I think what Tesla would say to answer it is that what they've said in past quarters, right? They're approaching it cautiously. They're in the validation phase right now, so the miles that are driven isn't the metric that they're looking at the most. I don't think. I think they're looking at other things, and until they have let's frame it this way. If you have a service and you notice some issue in that service during like a trial or a test phase, and you think that you can get that, whatever that issue is, figured out in, I don't know, let's call it 3 months. During that 3 months, would you try to continue to ramp up that service that has that issue, or would you wait until you can resolve that issue and then ramp from there? I think there would be merit to either argument, but I think that framing makes sense of why it's maybe not super important, whether or not within that specific time frame things are increasing dramatically, because there is still that issue that needs to be resolved. And until that is resolved, even if you're like showing this really great progress, ultimately it's meaningless, because at a certain scale, if that issue that is not resolved, that you think is going to get resolved in 3 months, if that's never fixed, like that progress that you were showing is in a way just false. So it would be an argument to basically make sure that you're the way that I kind of expect that this is developed for Tesla is that they've put these unsupervised rides out there. They've put these even supervised robotaxi areas out there. That is a great step to acquire the information that you need to then continue to expand. You take that data, I don't want to say pause for a while, but just the growth rate during that phase isn't the critical thing. The critical thing is taking the learnings from that sort of like trial or test period, resolving any issues, and then doing it again at a larger scale, right? Because then you've solved the things for that small scale. Then you can do it again, take that next leg of growth, and discover whatever similar or hopefully no issues exist in that next phase. So, as much as we would love to just see like smooth up ramp, like that's the easy thing for someone to do and be excited about. Point being that there are situations where that could be a misleading sign of progress if there is still that gating issue. And ultimately, it's not like the important thing. The important thing is solving those. So, all of that said, if you had already solved all of those, then yeah, you would see the up thing and the up ramp and the massive growth. I think we all realize that it's not there yet because we can see like, yeah, there's expansion, but there's not like massive numbers of cars in these fleets in any of these cities yet, which indicates that Tesla is still not there in terms of like completely going. So that's not a surprise coming into this earnings report. So that's why I say that would be one of my bigger questions, but I also think that that's the answer.
Yeah.
So I don't know, probably still worth asking just to make sure that that's correct, but we'll see. I'm sure that stuff will be discussed on the call, so we'll have a little bit more information on that probably later today. And then hopefully they'll, give some context on just some of the margin. There could be tariff impacts on there. Who knows what's going on with some of those things. So usually we get a little bit more info on that. Energy, I think they're just going to say like, hey, we told you last quarter it's lumpy. You guys have seen that it's been lumpy in the past. So this quarter was lumpy.
No.
I think there was even a negative impact from, let's go back to that. That could be even just as simple as that negative impact from the,
Was muss man da jetzt, ja? Weißt du aber nicht.
from that cell issue, they said, right?
Irgendwo muss man was
Profitability,
drucken,
yeah,
glaube ich.
negative impact from energy warranty related things. So who knows? That could have been a 10% impact this quarter. Looking over 6 months or a year, that's probably less
Ja, auf jeden
impactful,
Fall.
but in one particular
Das ist
quarter,
schon wichtig.
it can be, more impactful.
Ja,
So,
irgendetwas.
um,
Könnte man einen Screenshot machen.
that's my guess on that. Services and other,
Das ist auch
I'm
noch
like
geil,
Tesla
ja.
saying like, hey, this is real.
Weiß irgendwo
This
leicht
is
noch
not driven by a
Screenshots.
one-time thing, and we
Ja,
actually expect that
Screenshots.
continue to increase.
Maximum.
Which, I mean,
Kannst.
services and other is a bigger part of the
Ja,
business
ja.
than it was before. So, in
Das
terms
ist
of
auch
like
nicht meine
percent
Art,
increases,
sage ich jetzt mal.
improving that
Sage
margin
ich
is
auch.
definitely helpful
Du,
for
jetzt
the,
ist es
for
aber
the
zu
bottom
viel.
line.
Jetzt ist es zu viel.
So we'll see what's going on with
Ja.
Auto. We'll see what's
Jetzt
going on with
vielleicht sage ich
Robotaxi.
mal so.
I think
Weißt du,
that
ist
we'll talk
jetzt
about, hey, we just expanded to these
vielleicht ein bisschen
cities,
zu viel
Vegas and Phoenix, expecting those to happen soon.
Gymnastik, sage ich jetzt mal. Ne?
A lot of this is
Also
regulatory
die-
stuff, a lot of it is like figuring
vielleicht-
out like just the little
Ist jetzt
issues
ein bisschen
that
zu
they
viel, sage
explained
ich
that
mal.
you don't
Aber ich
want
wollte auch nicht
to
sagen, ich weiß es, ja.
sometimes the car gets stuck in an infinite
Weiß
loop,
doch auch
and
nicht, ja.
we're fixing that.
Nein, nein.
Sometimes the car doesn't want to, like, it doesn't want to move because it's not 100% sure that it's safe, and we're working on situations like that. Like, these aren't necessarily safety critical things where it's like, hey, our car just crashed into a wall, like, that's a different type of thing than, getting stuck in an infinite loop, right? Like, that's a different issue to solve, and those are the types of things that I think Tesla's solving, and those are the types of things that you learn from deploying the robotaxi in the first place, and that's why they're in this phase of like, we deployed it, now we're taking the learnings from the deployment,
Ja.
solving those problems, which
Ja,
is
voll.
gonna take time. We know it's gonna take time, but we know how to solve them.
Alright.
Once they are solved, then we can continue to expand,
Voll.
continue to ramp up, and ultimately you get to a point where you solve those problems. So
Sag, ja.
that's kind of my expectation for what they would say, but we'll find out here pretty shortly. All right, so just think if there's anything else here that I want to kind of go into.
Ja.
See what the stock's doing. So it's actually come back a little bit, which I'm actually, I don't know, a little
Ja,
bit
ist ja
surprised by
schon
that.
nicht so
I think
richtig.
that
Heute wahrscheinlich, ja.
the CapEx number should have been expected, but when you actually see
Ja,
it,
weißt du. Da macht vielleicht
And
den
it's actually
Unterschied,
appreciative
ja,
in a
ob
sense,
der
like sometimes the
jetzt
markets get a little bit like, oh
steht
man,
da
like
was
they
für
actually
eine Zahl, ja.
did spend that money, but
Steht
they
die
said
oder
that they were
die
gonna
Zahl.
spend. Sometimes it can be a
Da
little
kann
bit like
schon,
that.
sag ich mal.
And then I think probably the margin is
So eins
the
hat der
biggest
Frutige,
thing.
weißt
You
du,
know,
weißt
the
du,
operating
ja.
margin
Und sie sind
percentage
schnell
of
ziehen, ja,
1.4%
sagen, ja.
compared to analyst expectations of about 5%, which I think could have
Das
going
dann
into
schon
this
noch
maybe
richtig, ja.
could
Hast
have
du
been
gesagt, ja,
conservative.
sagt er, die sind Dialekt.
Some of the difference there
Sag ich
probably.
mal.
You
Und
probably
dann
could
mit
have
Dialekt
double
sagen,
operating margin if you
das
have like
ist
a
eine
normal quarters regulatory
Das ist eine
credit.
Behinderung, ja.
That's why I like
Bärtig
to
ist eine
always think
Behinderung,
about
Entschuldigung,
regulatory
das
credits,
ist
but
nicht Dialekt.
operating income is something that just
Wenn
like
du auch
we
die
were
Leute
talking about in
anschaust,
that
die sind alle behindert, ja.
way. So normal regulatory credits.
Alle haben den Brüllen werden, das
Probably
ist
would have
wirklich
seen
so.
that double, but even that would have been well below
All-
analyst expectations because of the
In Bern gibt es eigentlich
low
keinen Menschen mehr
profitability.
ohne Brüllen.
Some of that also.
Es
driven
macht dich
from the
behindert,
energy
wenn du so redest, es macht dich auch
situation,
behindert,
where
wenn
you
du zu
have
viel
negative
hörst.
profit margin on that. That'd be another
Das
300
macht
million.
dich einfach kaputt.
I think
Ja.
energy has roughly been coming in
Das ist
around
Sprache.
30% margin
Das
on
ist
an ongoing 12
traurig,
month
dass so ist.
basis.
Ich weiß nicht, wieso es so ist.
Thereabouts. So
Ich denke,
if you
das
just
ist
added
wirklich
sort of, 10%
absichtlich
there
so,
from
ja.
your
Aber ich frage
forecast,
mich
so
auch.
that's very reasonable. That'd be another 300
Ja,
million. So
und
that's
Bern,
600 million.
nein, es sind eigentlich
And
nur
then
nein,
immediately
natürlich
that gap
einfach
is
mal
closed,
Bern ist
and you're
schon.
back at, that 5%-ish.
Abgesehen jetzt eben von der
I guess you're
Sprache,
probably
jetzt
around like
auch
4% on that,
sonst.
that there.
Aber nicht gut, ja. Bern so.
But would have been much more,
I bet
close
it's
to
sure, yeah.
expectations of just like two very small and potentially like one-time situations
Jetzt halt
things
auch ein
happening
grösser,
there.
kann man sagen, als
Versus like what
Aargau ist
also
einfach
sort
jetzt
of
nicht der
expecting
grösste
modeling.
Kanton, sag ich
So,
jetzt mal.
That's why we go
Ja,
through
die
these
höchsten
things because
Berge und so, das ist ein
a lot of times the
limitiert, sag ich
reaction
mal,
is just
ein
like,
bisschen.
oh man,
Ja,
1.4% operating margin, like Tesla did so bad. Like,
Geografisch
we're
und
expecting
ja,
5.4, and it did like 80%, It's like, well,
Nicht so viel.
what was that 5.4 based on? If it's regulatory credits, like everyone always factors those out anyway, it doesn't really matter. If there was some like one-time thing on the energy warranty situation, like that's not gonna happen every single quarter, hopefully. I mean, free to make that
Ich muss
conclusion
mal
yourself,
nachschauen,
but
ob da jetzt live
I mean, patient,
Ich bin
so
schon
alright,
live.
add that money back in, and then all of a sudden you're basically back there. Not quite, but pretty close. And then you've got like a top line beat in terms of just overall revenue. You've got like a top line beat in terms of just overall revenue, driven by automotive revenue. Let me flip back there, so.
Machen wir jetzt so, nachher so.
Than expected, which means higher ASP than expected.
Jetzt ist live,
Really,
weißt
the only negative in that part of the business would be just the cost of goods sold being higher than expected. We'll see what Tesla has to say about that. Maybe there's context, maybe there's not. So maybe a little bit too early to determine the extent of the impact there, but leaning towards negative. And then energy sales, like we know that bucket is always volatile and can miss to the up or the down. And, last quarter was 40% margin. This quarter it's 20% margin. Again, on a rolling 6-month basis, that's still 30% for both quarters, which is, roughly what it's been. So that's always the best way to look at that anyway. And then services and others, like that's actually a pretty significant beat and at a pretty significantly higher margin. So that's like unquestionably, from just a financial perspective, positive. And the fact that they're guiding for that to continue is a positive. So I would say sort of like good on automotive. And again, good is framing it in terms of analyst expectations. I know people don't like that. I don't like it either. It's just how the street works, though, right? Like it's stock market prices, it's all based on expectations. So top line, we beat, driven by services, driven by automotive. Those things are, I think, unequivocally good. Energy sales missed. I think that's a more difficult area to model for analysts. So whether that's good or bad is less difficult or less simple to say, less simple to make a conclusion on. Similarly with the energy margin, especially knowing that there was that potentially significant impact on the cell issue. So like a little bit more mixed, slanting negative on energy, but like not as negative as the numbers make it seem. And then again, slanting negative on cost of goods sold, but we'll see if there's any context on that. And again, just to reiterate, it looks worse quarter over quarter than it really was because last quarter had a one-time benefit. So, and I don't want to like sugarcoat it because like if I was just modeling this with like not really looking at stuff that closely, and you're saying you're going to deliver 120,000 more cars, I would say like, all right, what was the margin last quarter? And now our costs should come down because we're spreading over more cars, and our margin should go up, and that didn't happen, right? So. Not only is it declining, it's also not going up, which would be expected without other context, so we'll see what Tesla says there. What Tesla's, it looks like they jumped to be quite a bit higher than analysts would have expected. I think with everything that Tesla said on the last call, this is a pretty trash forecast. They've been significantly indicating that obviously capital expenditures are going to come up, but if you're looking at capital expenditures increasing by like 2 to 3 times what they were before, to then sit there and say like, oh yeah, R&D and
Der Ramsey-Fall ist auch da.
doesn't really make much sense.
Was
So
sagt er? Hä?
anyone I think
Kommt,
reasonably
das
looking
ist
at that would have said SG&A, R&D going to come up. Maybe you can take the stance that like, oh, it was a little bit higher last quarter, so maybe they'll come down. Not the stance I would have taken though. So I think that was just a low forecast. Could have been offset if, you know, automotive gross margin was better and still hit really good operating income. But didn't end up being the case this quarter. So no problem for me on the operating expenses. And then again, on the income line, basically that's all just flowing through with the difference being from the SpaceX and the one-time tax thing too, so. All right, got about 30 minutes till the earnings call. I think we'll take a look at the chat here. Super chat, so, Turkhouse, thank you for that, appreciate that. Passion Planet, saw it again. This is tiny, let me see if I can make it bigger here. I know we're not got the best background to look at these. There we go. First off, Bruce, thanks for that. Appreciate that. Great to see you back. Missed you in Q1. Thanks as always for your insights. I missed it too. Again, if you didn't catch me say it earlier, had that been in my control, like it was something I could not miss. So unfortunately, just unfortunate timing. Thank you, Rob. Any merger thoughts? I don't know. I mean, outside of what Elon has said, no thoughts from me. I think that I think Elon basically expressed on the last call that there are some things that become perhaps unnecessarily more complex with the businesses being separate. I think that Elon has said before that his companies seem to be converging in interesting and more converging more frequently in interesting ways. So I don't know. I think you can kind of read the tea leaves from Elon in terms of like the direction that maybe he'd want to head, but that would be a complicated transaction. So beyond that, I don't know that I have a ton of thoughts. John, good to see you on here. I think they're progressing, but I believe it's biased to roll out slowly when crash wrecks, and you know that they will what they will do to Tesla. Yeah, I think that's their point too. Is like until they're super comfortable, like no reason to push it. Like there's not really. I mean, there's competition from Waymo, but like I'm not sure Tesla really views that as like actually real competition, because I think that they probably share the similar analysis of Waymo's business that I do, and like I don't really see how you guys can actually scale it. And if you do, then it's once it's at scale, like Tesla can just do the same and will do the same and like undercut you. And I mean, not super exciting for Waymo's business, I don't think. Ben, good to see you. Your hair is so dialed in. I was actually wondering, I thought I was maybe going to get some criticisms on the hair. It's getting a little contempt. You guys know I go in phases with my hair. You've been following for a while. Go back and look at the S&P 500 inclusion. I was just watching that with someone the other day, just like be like, hey, this was an interesting time. Looking a little different. Excel segment of the show. Thank you, Tesla Pilot. Mario, thank you. Eric, thank you. FSD purchases ended in Q1. How does that factor in the COGS calculation? So, it's a good question. At one point, I probably knew this very well, but I think from my recollection, a portion of an FSD purchase definitely was reflected like in that quarter when it was purchased, but not all of it, right? Like that was something that was, some of that revenue was deferred, and we've often talked about that deferred revenue. The amount that was deferred became smaller and smaller over time, not zero. So it wasn't always all of the margin that was recognized up front. But it's a good point, and that might have been one of the things that boosted margins. I have to go back and look at the timeline. It's just not I still follow Tesla extremely closely, especially relative to the average person, but relative to what I was doing before, it's not quite there. I would have to go back and look at like what the exact dates the FSD purchase option ended. Because yeah, if that was in Q1, then that would have been something that could boost it. And again, some of that will get deferred, but a lot of that probably recognized in that quarter. The percentage of it that gets recognized in that quarter, though, I don't know. But point being, that could have boosted Q1's margins, because it's one of those things where it's like, hey, it's ending now, you gotta buy it, or never. That's something that will boost things temporarily and could have a margin impact. If that's happening, if that happened in Q1, that would actually make this number even stronger, this 1.48, because if you have some like incentive that's expiring, you expect a boost from that, which you would have seen. Again, I need to go back and look at when that was, but just looking at these numbers, it seems like Q1 is probably when that happened, because you do see a kind of spike. We talked about this with like tax credits expiring, right? Things expire, you get a spike, then you've got a lag, you've got like an overhang in the next period. If that's kind of what's happening here, this would be sort of like a inclusive of an overhang environment thing. It depends when you want to happen, right? So like, there'd still probably be some impact from that, even if it wasn't Q4, I guess I can't remember exactly, closer to Q1. Some overhang from that where, okay, you just had a bunch of people buy, so normally in a quarter you might have like some people come in and be like, oh, now's the time for me to buy FSD. But like, now they can't do that anymore, and if they were on the fence, then they probably bought it last quarter, so that would go to zero. And any growth would have to come from like literal new subscribers, not from like your current fleet that, didn't want to buy or whatever. So obviously there's still current fleet, Tesla's expanding markets. There's a lot of factors influencing this. You can do the whole plus minus thing like Tesla does with profitability. That's kind of what I'm talking in circles about. But point being, if there was a significant negative impact there, this number is even better than the rate of increase, although on a percentage basis might be a little bit smaller. On an actual true numbers basis, this was the largest increase in FSD subscribers ever in a quarter, right? For the data that we have, which almost guaranteed to be accurate for all of Tesla's history. So that's something you really like to see. And sounds like a lot of that driven with really high take rate on so I think those are extremely important signals that probably won't really get any credit in the market, certainly not in the first like 30 minutes after the earnings gets posted, but that are really fundamentally very important. And in the future, it's like, what's more important? Like happier customers buying this $100 a month subscription option, or like your automotive cogs that have been kind of like, I mean, you guys can see this. I don't know how far we have to go back here, but like, kind of know what cogs are going to be. It's like, I wonder if cogs are going to be around $35,000. I think it's a pretty easy bet to be like, yeah, it's probably going to be around $35,000, right? So this is not going to change a whole lot. This is going to change. You can see it, up 56% last year. COGS down 1%. A lot more stable, a lot less stable. A lot more important in the future. So this is what'll get, this is what influences all this other stuff that everyone's going to look at and be like, oh my gosh, Tesla lost $1 billion in free cash flow. Tesla's, if you take out SpaceX's gain, they only had $77 million in GAAP net income. Like, that's going to derive from all these things, not to diminish the importance. Like, that's a massive business, and the cash flow coming from that is helping afford Tesla all these investments they're making. But 5 years from now, like, am I going to care about the automotive cogs? What's going to 5 years? Oh, okay, it's still the same. But I don't know. Hopefully, you guys understand that point. I'm not going to hide this stuff. I can get out later. All right, so I'm going to wrap it up here. But thank you guys for the super chats there. I do appreciate that. It's great to come back and have such a warm welcome. And hopefully that went okay. We'll flip over to the earnings call here in about 25 minutes. The link for that is down in the description. And I think it'll automatically redirect there. If not, if you guys just want to wait. But we'll flip over there for the earnings call here in a bit. All right. Thanks, guys.